Joining me now is the former Federal Reserve Governor, Kevin Warsh. Kevin, it's great to have you this weekend. Welcome.
Great to be with you, Maria.
How would you assess the macro story? And do you believe we're going to see growth in the first quarter or contraction?
So the president inherited a fiscal and economic and regulatory mess, and it's going to take a little digging out to be on a stronger platform for growth. Listen, my view is that the economy is transitioning from one where we had big government spending, short-term stimulus, and it had a veneer of prosperity. But as you know, Maria, hardworking Americans weren't buying it. So we've got to build a new platform for growth. I think economic growth this year can be strong with good economic policies, but Rome wasn't built in a day, and so this will take some time.
Joining me now.
Hey, how's everybody doing? Colin Plume, CEO, Noble Gold Investments, and we got Jake Bell, Senior Sales Associate at Noble Gold. What do you think of what he was saying, Jake? You think that there's some strong growth potential this year?
No, I think he summed that up beautifully, and I didn't hear that clip until right now. And sounds like our job is done. We can just play that and go, right? No, that's exactly right. I mean, we inherited a mess. Things aren't going to be fixed.
Sure.
I guess to start off by just stating the obvious. When you deal with things so vast as our economy is and how it intertwines with the world economy, when one policy is implemented, it could take months, if not years, to see it come to fruition.
Sure.
And I think that's kind of where we're headed with what we're seeing right now and the Biden recession. And so the potential for growth this year is not good. I mean, we've been seeing those numbers get adjusted over the last 6 months, lower and lower and lower. I think the one I found out maybe 2 months ago was JP Morgan lowered. We're shooting for 3%, right? Just for those who don't know, we want 3% growth with 3% inflation. That keeps the tracks greased. That keeps everything moving forward. We don't want
but the Atlanta Fed came out 30 days ago and said that they're anticipating 1.7% growth.
That's exactly right. And I think that's pretty accurate. We'll see how it plays out throughout the year, but the platform for sustained growth is not there. And it hasn't been there. And it's been confusing to all of us over the last 4 years where we've seen the stock market go up. And it just doesn't add up with the fundamental layers underneath this economy, why we've seen that. And so we've been touting, hey, the stock market's overbought. We're not just pulling that out of a hat. Here are the numbers to prove it. We've had the inverted yield curve. We've had PE ratios through the roof. And so now we're seeing this take effect, and everyone's giving the short-term answer, the tariffs, and that's certainly playing a part in it. That's not helping things in the short term. I think we're both on the same page. We think that has long-term potential for growth and for also negotiating power, which maybe we'll touch on later. But as far as growth this year and maybe next year, I think we need to see interest rate cuts, and that's something I've pivoted on just recently because it's been another good day for gold. It's been another bad day for the stock market. I see that scenario, that storyline playing out for the foreseeable future.
Mm-hmm. Yeah. And the job report came out, unemployment's it rose to 4.1%. They added 151,000 jobs, which is not enough. And obviously with the, Doge coming in and getting away from a lot of government jobs, and unemployment's going to continue to go up because obviously we know that a lot of the jobs, 35% of the jobs that we saw were actually government jobs, not private jobs, not, working for corporations. So, Charles Payne from Fox says he thinks we're already in a recession. He thinks that cash is really dried up. We're in a tough position for cash, which is part of the reason that a lot of people we're seeing the stock market pull back because people need money to live, right? So they're liquidating their stocks, and that's causing a tumble in the stock market. The reason I wanted to get on it because I think there's been so much about the tariffs, and I think that's everyone's saying that the recession is from the tariffs or the stock market's from the tariffs. But what I believe is that this has already been happening for a long time. And we've just been, starting to pull back some of the things that we've been crutching this economy along since 2020.
That's well said.
And I also want to say, just in terms of gold, and then we'll get back. Oh, let's talk about this right here. Let's say inflation right here. Let's look at this chart. Inflation in the U.S. since 2021 got, really high. 2022 got up to, 9%. At the highest, it was above, above 9% in terms of inflation, which these are numbers. We haven't seen inflation above 9% since the 80s. At least the government reported inflation. I've always said inflation is much higher. So you have that inflation number there, and you have credit card debt. The only time credit card debt, Jake, went down was during COVID, because the government gave free money and people were locked in their house, so they weren't spending money as much. And so that was the only time in the 20 years before that we saw credit card debt actually drop. But now you can see it's well over $1 trillion.
These are the factors that everyday Americans are dealing with, and without, maybe we are not able to articulate it, but we feel it, we know it, we understand it just by the cost of living. And when you say 9%, I think, well, we look at our groceries, we look at what we have coming in and what we have going out. There's not a 9% spread there. That's much greater. That's much greater in day-to-day average American, how it impacts. And so we're just getting started with this correction. And again, what we're looking at here are some fundamentals. And when credit card debt skyrockets like that, individuals are being stretched out.
Sure.
Well, when individuals get stretched out, that spreads. And our economy is basically that. I think that we could oversimplify our economy with that comparison, because that's how it's playing out, and that's what we're going to see. And of course, those who got out of the dollar, the one thing that I think we're all dead sure of is that we don't know what's going to outperform. We don't know what asset classes we should all be in. You and I have our opinions, and that's what we're going to talk about. But we know for a fact that the dollar is not done devaluating. And that's, in one sense, not saying much, because it always devaluates. That's the nature of our system with inflation and the fact that it's a fiat currency. But we're talking about dramatic levels. We're talking about, if you hold dollars in a bank that you are not going to use, you cannot conceptualize that as a storage of wealth. It's not accurate enough. It is much more accurate to view that as a line of credit. And that line of credit is only as good as the body issuing it. And of course, when it's been abused the way it has over the last 4 years, you're losing your wealth. Everyday Americans are losing their wealth simply due to their purchasing power. And of course, that's what we deal with here with alternative assets. I'll shift gears a little bit, and because I think what we want to talk about is, again, Biden's recession. That's what we're seeing.
Yeah.
And so a little track record, if you will. This is a short summary, but basically his biggest 4 policies: the American Rescue Plan Act, March 21, $1.9 trillion. Infrastructure Investment Jobs Act, November 21, $1.2 trillion. Inflation Reduction Act, which makes me sick to say that out loud because it was very clearly the opposite. It was only $437 billion, but it was subsidized by corporate taxing for another $739 billion. So there's another $1.1 trillion. Chips and Science Act, $280 billion. There were obviously others. And there's good and bad built in and all that, right? We can argue the individual policies and where the money went, and the continued saga of Doge, I think, will reveal more. But all in all, we can sum it up as close to $5 trillion. And he's doing all this. He did all this while we were in a deficit, right? He didn't. Right. And deficits can be good, right? There's good debt and there's bad debt. But you simply cannot stockpile the debt. And I think what most people are, just myself included, I'm so pissed off, I'm so fed up about seeing our federal government sell out our future, our children's future,
Right.
to pay off the present.
Right.
Right. I don't run my life like that. You don't run your life like that. Again, there's good debt and there's bad debt. And at some point, too much good debt becomes bad debt. And that's exactly what's happening. And so what do? How do you safeguard yourself? Well, alternative assets. And again, the phrase that I love to use, because it's the most accurate and a little poetic, is something like precious metals makes you your own financial sovereign. And we spoke about it last week. There's no debt behind precious metals. There's no government issuing precious metals. There's no financial body behind it. They are their own asset class. You instantly put yourself above any one economic system. You detach yourself from all that. And
Sure.
so when we see this, we have a $2 trillion deficit, right? We spend $7 trillion. The government brings in $5 trillion from taxes. We have this deficit, and you keep adding on to our debt. You keep selling out our future. Well, we don't have that. That has to be financed.
Sure.
How does it get financed? Well, what they'll say is, hey, we're going to have growth. And that's the biggest one. That's the best option to get out of debt, is to have enough growth, enough GDP to climb us back out of it. And a little selling out of the future to pay for the present, sure. But at some point, there's a balancing act. At some point, it's gone too far. And I think we've reached that. And I think we reached that several years ago. I think we reached that before the Inflation Reduction Act was passed. And of course, just people who align with that political ideology, they just don't seem to grab it. And a lot of the Republicans don't grab it as well. Apparently, the only guy who does is Thomas Massie, representative out of Kentucky, who, he's got some heat from Trump lately. But I'm a big Thomas Massie fan as well. He's the only one who didn't back the CARES Act, and I don't want to go into that just yet. I haven't done my deep dive into it. But when you start adding all this up, when you start seeing how much debt we're in and the fact that it needs to be financed, well, growth is ideal. Taxing is another way. Well, how much more could we possibly raise taxes?
Sure.
I don't think Trump's going to raise taxes.
No.
Hopefully he doesn't. Hopefully he lowers them significantly, because these are just outrageous. I mean, we went to war over taxes, and we're at, what's the highest tax bracket? 39%? Something like that. And I don't know what the corporate taxes are, but that's just a whole other animal. And then the final one is obviously money creation. That's how we get our way out of debt, is just printing more money. And there's been plenty of that as well. So what we've been seeing is obviously the precious metal market climb. And for those who've been on the sidelines, I have some encouraging words for you. Look at these charts over the last, I don't know, when did we bottom out? I think it was below 1,700 back in 22. That was kind of this bull market's bottom until it took off. Look at it. Look at it go up. Just pull up any chart of the precious metal market, and what you're going to see is a very steady incline. We haven't seen any dramatic spike, because if you saw that, then the concern of a pullback, of an overdone and a too steep of a run up, a pullback would be a legitimate concern. Is this an overvalued commodity? And the fact that we've seen this climb so methodically, I think, is a very positive thing. So I do not believe whatsoever that we are at anywhere close to the end of this march. And again, there is some historic precedence for this. 2008, 2011 was the last big bull run for precious metals. It took 3 years to play out. Well, that was the world financial crisis. That was a big deal. I think what a lot of people are finally coming to terms with is the disaster that was the previous administration, the policies, fiscal and monetary, that set us up even worse than what happened in 2008. And it's a good thing that these things are starting to play out, but we were on a one-way road.
Yeah.
This pullback, this recession, especially in the stock market, this was predetermined.
Yeah,
there was no
100%.
Avoiding this.
Yeah.
And then same is true. The inverse is true for the precious metals. I don't think 3,000 is where we stop.
The only way we avoid this is if you just do what the last administration does, which is you just continue to add more debt and you print more money and you do more government jobs, which it's a way of masking what the real issue is. And that's,
Yeah.
the last 2 years before Trump got elected, if you look at the big measures that Biden put into place, the Inflation Reduction Act, cutting college debt, that was just a ploy to get votes, right? That was all he was trying to do. And I talked to people that I know that are Democrats that were pissed about that college debt because, and I'll tell you, the one guy I spoke to said, big time Democrat. He said, well, I just finished paying off my debt. It took me 20 years. Why do all these people get a reprieve? And it's funny because that's a lot of times that's what it comes down to. Maybe if it was 10 years before, he would have been happy about this, right? But what about all the people that just paid it back, right? That just took the loan as is.
Well,
right. I mean, that's the big thing. Let's dive into GDP. GDP, government spending. Let's dive into that a little bit here. The Atlanta Fed says 1.7% growth, which obviously 1.7% growth, 4.1% unemployment. That's recession. We're in a recession. There's no way around it, right?
Well, I think this is the crux of it all, right? Because we can approach this conversation from a dozen different angles, but it's how are we growing? How are we growing sustainably? And that's what bringing jobs in on our shores is all about. Something fundamental that we can then build off of and hopefully decades of sustainable growth. Again, we saw the stock market rise over the last 4 years. None of that was sustainable. Stretched out is the term I used.
But bringing jobs, Jake, it takes 3 to 4 to 5 years, right? I mean, we're talking about it cannot happen right away. You can't build manufacturing that quickly. You can't build a facility. I mean, I've seen it. I've seen all these owners say, great, we want to come back. We want to do it. Obviously, much easier for us, better control, better quality. Let's hire people. We're talking 4 years.
Yeah. So the logistics of just getting a building built, right? And that's one of the things that Trump implemented is, hey, we're going to streamline your processes to get this done, which was brilliant. But GDP, we are not going to grow while we are tearing stuff down, right? And that's what we're doing. That's what Doge is doing. That's what we're going through. We're going through line item by line item through the federal government, and we're finding out where's the poison, where's the fraud, where's the waste. That alone is going to take a couple of years. That all needs to be rooted out. You're not going to have growth on top of that scenario. You've got to get rid of the cancer first before you start to heal. I mean, it's the story of the phoenix. We got to burn off what is dead, and what needs to go needs to burn off. Correct. That is painful. And that's what our Secretary of Treasury was talking about the other week when he said we're going to detox. Saying the same thing with a different analogy. And these things are going to take years to play out. It's not going to be fun if you're expecting your retirement to hold fast in the stock market. I mean, obviously, the last couple of weeks have been brutal. Do you think this is the end? I don't. No. I think this is just the beginning. And again, this
is a real hangover effect we're going to be having for a while. And I think that's something that people need to come to terms with. They either need to come to terms with the idea that, hey, my equities are going to go down for a while and I'm okay with that, or I'm going to do something else. There's really just two, because let's go to customer sentiment. This is a good way to look at things, I think, because this is really important with all the bankruptcies and all the things happening. What are the people saying? What are people saying? And I think the sentiment index is that they're anticipating inflation. They're anticipating a pullback. They're anticipating higher inflation, which this is the real crux of the whole problem for this year. For Doge to be a success, they have to cut enough to get our inflation down, which brings rates down. That's the ultimate success.
Yeah. How far are they going to be able to go to actually move the needle?
Right.
That's exactly it.
And they've cut, if you look at in terms of the tariffs, right? The tariffs are going to bring in 140 billion based on where we are currently. Doge has saved a little less than 100 billion currently, but it's not 100 billion day one. It's over many years.
Mhm.
I think their goal is to get to $1 trillion. So, I think you look at Doge cutting $1 trillion over the next 2 years. The tariffs bringing in some income, which is good, and then ultimately getting rates down to help, with the real estate market, commercial, residential, credit markets, all of that, getting rates. That's the scenario that we can get out of this mess. But we're talking multiple years right now.
And multiple moving parts.
Moving parts. Exactly.
And the one thing that I haven't heard get brought up in a lot of the talk is what that chart is showing right there, the inflation expectations. I think that's a big point that everyone should start queuing into is I don't think we're ever going to have 2-3% inflation.
Yeah.
And maybe we will, but maybe it's 15 years out. And again, it's because of these policies put in place. These policies were passed several years ago, but they're implemented over the course, sometimes 5 years or a decade. And when you continue to spend and borrow, even if you have some counterforce like Doge cutting down the fat and reeling it in, you still have inflationary aspects of previous administrations that are going to push that for the foreseeable future. And that's actually a really beneficial thing for the longer term growth of gold as well.
Mm-hmm.
When we're in a good economic environment and we have low inflation and good job numbers and good stock market, well, gold doesn't skyrocket like we've seen it.
Correct.
Right? We're under good economic conditions. Gold is going up incrementally every year. Well,
yeah, gold is like your 7 to 8% return over time investment. It's your safety play. But the fact that it's up almost 48% in the last year and a half is a testament to how bad things are. I'm going to come back to you, Jake. I just want to go to a clip real quick here. Yeah, right there.
Talking to people today about their retirement accounts.
Sir,
excuse me.
Yeah.
Do you have a retirement account?
Yeah, I've got a TSP from my old government job.
How's that doing?
I'm forgetting about it. I can't contribute to it. There are fees to get the funds and the investment options are limited, so the money's just stuck.
How about a gold IRA?
I can do that?
Absolutely. You can roll it into a gold IRA and you have all the same tax advantages as a TSP, but with more flexibility. And you can put physical gold and silver in your retirement account.
I'm taking control with Noble Gold Investments.
Your retirement, your rules. Noble Gold.
It was hard to get that gold bar back from that young man there.
Good thing you're bigger than him.
I was a little bigger, but he served in the military, and I was a little intimidated. So, but I'm an old man, so I know some dirty old man tricks. So I was able to get that bar back. I know you've done some TSP rollovers, Jake.
Mm-hmm.
What do people say that have a TSP? Why do they want to get a TSP out of a TSP and into gold? Is it the limited options? Is it like
That's a big one.
What are the reasons that people do it?
That's a big one is, first of all, the reason we exist is because we're able to offer something that traditional investment firms cannot, which is, again, owning the actual physical metal. That is of the utmost importance. If you ever want me to dive in on that, or any one of our representatives here, give us a call. But we do something that no one else does. And so obviously TSP doesn't have access to the metals. They don't have holding facilities for the metals. And, they're doing things that is best for them, right? That's when options are limited, is because, TSP is funding itself somehow through the investments that their individuals are getting into. So control is a big one. And obviously safety. And what they have to offer doesn't give protection. There's nothing else on this planet that offers your portfolio the defensive positioning that precious metals do. So a big reason, sometimes it's conversations around the TSP itself. Sometimes it's just a distaste for what the government is doing in general. and for good reason. I've aligned with my clients on that. We connect on that issue, but sometimes it's simply macroeconomic conditions. And again, precious metals has been the place to be over the last several years, and I do think it's going to be the number one performing asset in the next couple years. Obviously, we don't have a crystal ball, but I mean, the tea leaves are laid out, and I don't see an upward trajectory for the stock market. I don't see an upward trajectory really for anything but precious metals and maybe some alternative assets. But
Yeah, and I think with the TSP, the one thing that, and listen, we're not financial advisors, so if you need to talk to somebody, talk to somebody. We just deal in the physical metal. But the one thing that I always found that people told me when I was talking to clients about this directly was that the TSP had 4 different funds that they could invest into. It was very limited in terms of what they are allowed to invest. You don't have a wide range of options. With our self-directed IRA, when you roll it over, you can do it in precious metals, you could do it in crypto, you could buy Tesla stock. Like, you have more control than a TSP or even a 401k. I mean, I would always say, even if you didn't do business with us and you have access to a 401k or a TSP or a 403b, wouldn't you say it's a better to go to a self-directed anyway, just because you have more control and more options?
certainly. And I mean, there's give and take in everything, and there are different contribution limits based on these different accounts. But once you get into a self-directed IRA, no one tells you what to do. And for an American, for me, and I don't, not everyone aligns, but you want to be in control. You want to have both hands on the wheel. And investing is a big world, and it can be overwhelming for most people. And so getting something you can understand, that's also a benefit. And that's what we do here at Noble Gold. That's our first conversation is, this is what the move is. This is what this market's about. It's not complicated. People make it sound so complicated, but you don't know what you don't know, which is why people call us. They get their education, they feel their comfort. And I just saw our success story come in, and I don't know, do we call it our company portfolio? Our company portfolio's track record is incredible. Our clients.
Well, yeah, because we've done over $2 billion in sales. And I just actually got from our custodian what our values are of our clients' IRAs. And we're nearly, $3 billion in assets. So, it's good. It makes us feel good that we're trending in the right way, because so many of our clients are at or near retirement, and they need it. They need the money. And so that they know that, hey, I can get some cash if I need to, or I can liquidate, I can get the gold and silver, and also that is the thing that when I set out to start Noble Gold, is that I wanted it to be service oriented, that we didn't just sell you the gold, that like when you're ready to do the distribution, we can help you. We will call the custodian, we'll help you with the paperwork. We do all that. We don't make any money on any of those transactions. We just do that as part of our service, because I felt that service had gone to the wayside and it gone away. And so to see this from Marita here, that she made $45,000, it took her to convince her husband 2 years to talk him into it. Listen, we're not perfect, right? Obviously you knew something and no, I'm just kidding. And so, it's great to see these kind of stories. I love hearing this. And we appreciate you as a client, obviously. So it's one of these things where there's so many options today. There's so many different things to invest into. We just focus on getting you an item a precious metal that you own by yourself. It's not fractional. There's a lot of growth in fractional items happening. It's not an ETF. I mean, we're seeing what's happening with the London Exchange, where the whole thing is being exposed as a scam, that people are trying to get their gold and silver from the London Exchange. It's not there. They're delayed. I mean, there's a lot of these things happen. And that's obviously part of the reason the price is going up, is people are seeing like, wait a minute, I would just buy like GLD, or I'd buy a contract. And now they're saying that the contracts, the metals aren't there. Where are the metals?
So,
we're talking about an audit of Fort Knox. We don't know if we have all the metals there. Like, where's all the gold? Like, where is all this stuff? And so I think investors are opening up and going, wait a minute, if there's all this gold not there, like, is the price the way it is because it was there and now we're realizing it's not there? I mean, these are things that people are really realizing right now, that
Well,
maybe
look,
a lot of the gold that was supposed to be there is not there.
I think the reason we're so popular and the reason our clients love us is because we are a bookend service from start to finish. And I spoke with a guy the other day, and I brought this cheeky little example up to him. I was just like, well, it had just been the time change. I was like, did you set your clocks? Did you do it on your car? Did you get all that? And he's like, no, they're kind of a pain in the ass. I don't want to take the time to learn it. Da da da. It's like, well, if you can't do your clocks, are you really going to want to deal with issues in your IRA account? And of course, he got the point immediately, right? And that's why we're here. We are with our clients from start to finish. If there's a problem on A, B, or C, our clients have one person to call.
Right.
They call us, and we get that ball rolling. So
absolutely, yeah. It's we're in unprecedented times, obviously, unique times. So much to discuss, but I think to round up here, this recession was already happening. It happened before President Trump got in office. He's trying to fix it. It's not going to happen fast. We've been blaming the tariffs, obviously. But there's opportunities, and I think people need to decide right now if they're going to ride the wave. Okay, they got to know they're going to ride the wave. It's going to be bumpy. Equities are going to be bumpy. It's going to be rough. There's going to be sell-offs. Consumer sentiment is low. GDP, if the Atlanta Fed is right, 1.7% GDP, which is the lowest reported. If it's true, if it happens, it'll be the lowest reported in 20 years. We haven't seen 1.7% GDP. So these are all things that are out there. There's options. You can change. You can do something different. We're here to make that easy and smooth. Jake's here. Before we got on today, I think I was telling you I saw another review on Google that came in, or Trustpilot for you. So obviously you're doing great with your clients. Why don't you round up here, Jake? Just kind of round up the day here and kind of summarize what's going on.
Sure. Well, that is a point of pride for us, and if you go look at our reviews, that makes us stand out against everyone. So
correct.
One thing that keeps rattling around in my mind is energy. Right? We need energy for growth, especially Trump's talked about making the sovereign wealth fund predicated in Bitcoin, and those are energy intensive assets as well. But any developed nation, any succeeding, prospering nation has energy at the top of its list.
Correct.
Right? You just have to have it. And when Biden got us into back into the Paris Accord, and he cut the pipelines, and all of these things affect the bottom line and don't allow for growth. I mean, and that's what we're coming full circle around. That's what we're trying to hit from a dozen different angles, is what we're experiencing today, to sum it all up, is a trajectory that we were put on years ago.
Correct.
This was a one-way path, and we're here now.
Correct.
And it's just getting started. And that is why you get alternative assets within the portfolio. When one is going up, the other's going down, and when one's going down, you got to get something that's going up. And that's, of course, why precious metals have been so popular. The proof's in the numbers. If you think the precious metal market is tapped out, well, then now is not the time to get in. Do you think the market's tapped out? I don't. I think we're just getting started.
I think we're just getting started. Yeah, and I will say, I want to tease a little bit for next week. We've had a lot of people talking to me about private equity, talking about what they're doing in the markets. There's this huge story that we're going to go over next week. We're going to talk about this massive debt and pension problem that we have that's coming due. If you know Joanne's Fabrics, you know it. There's a lot of companies that are filing for bankruptcy that have been tied to private equity, and we're going to break down this whole story. This is an unbelievable story. This is a 2008 repeat, but for corporations, and almost triple the amount of debt. So that's something that we're going to dive into next week, Jake. Hopefully you can join us. But I really want to expose it. There's a viral video that's coming out where a woman really talks about it in detail, but I'm going to go even farther, because people should know that these debt instruments are happening again. You know, they said it was over. We're not going to do the CDO. It's over. Now we have a CLO, which is basically the same thing that's happening on the commercial side. So we're going to dive into that next week. So anyone has any questions about private equity or anything happening out there, please send that to us. But that's what we're going to get into next week. Again, thank you everyone for tapping in, joining Noble Gold Investments. Call Jake Bell. He's a great guy, easy to talk to, family man, old soul, great person. So if you want to connect with somebody here, talk to Jake. And again, thanks everybody for tuning in, and we'll see you on the next one.